everyone, and welcome to our webinar, Supporting Skills for Women Entrepreneurs, Innovators in Accounting and Finance. This event is supported by UNESCO and Empire Code Loves Back. This regional training will enable the students, underserved young women, and women in grassroots to participate in innovations, develop creative industry, and contribute to local and national economic development, and nurture entrepreneurs and business incubators. This project is part of the wider effort in implementing the 2030 Agenda and its SDGs, especially on goals 4, 5, 9, and 17. So my name is Felicia and I'm your speaker for today. I'm also the co-founder of Empire Code and Empire Code Loves Back. A little background on myself. I graduated with a degree in accountancy from one of the Singapore's top universities and started my career as a tax accountant in Deloitte. I then moved on to product control, where I was responsible for safeguarding the assets of Tier 1 investment banks through ensuring accurate reporting of daily P&L and valuation figures for the trading desks in London and Singapore. Due to my knowledge and experience in computer science education for beginners, I've been invited to speak about our commercial and philanthropic work in education across ASEAN, Hong Kong, and Japan. I was and still am inspired by my mom, Madam Sri, who was a Singapore Ministry of Education Mathematics, the design and technology teacher for more than 40 years. She now sits on the board of Empire Code Education as consultant. I head up the education team, where I promote early childhood education and the upskilling of adults. Learning should be for everyone, regardless of age. So for today's webinar, let's quickly go through what's on the agenda. We'll start with an introduction to SDGs and why should we care, and move on to which are the focused goals for today. Next, we'll showcase women in innovation and start on our focus sector for today by discussing in depth about the industry innovation trends and how we can educate ourselves on each of these. Lastly, we'll have an interactive session with additional reading and free training materials before concluding with an FAQ and a survey and with your certificate of attendance. So an introduction into the SDGs. The 17 goals to transform our world. The Sustainable Development Goals are a call to action by all countries, poor, rich, and middle income, to promote prosperity while protecting the planet. They recognize that ending poverty must go hand in hand with strategies that build economic growth and address a range of social needs through education, health, social protection, and job opportunities, while tackling climate change and environmental protection. More important than ever, the goals serve a critical framework for COVID-19 recovery. Why should we care? Why Sustainable Development Goals matter? They unlock and empower human, economic, and societal changes. More people around the world are living better lives compared to just a decade ago, and more people have access to better healthcare, decent work, and education than ever before. But inequalities and climate change are threatening to undo the gains. Investment in inclusive and sustainable economies can unleash significant opportunities for shared prosperity. And the political, technological, and financial solutions are all within our reach. Our focus goals for the day. Goal number 4, education. Education enables upward socio-economic mobility and is a key to escaping poverty. Over the past decade, major progress was made towards increasing access to education and school enrollment rates at all levels, particularly for girls. Nevertheless, about 260 million children were still out of school in 2018, nearly 1/5 of the global population in that age group, and more than half of all children and adolescents worldwide are not meeting minimum proficiency standards in reading and mathematics. So a few definitions. Let's take a look at social mobility. It relates to the movement of individuals, families, households, or other categories of people within or between social strata in a society. It is a change in social status relative to one's social location within a given society. And what do we mean by proficiency? This means the fact of having the skill and experience of doing something. In 2020, as the COVID-19 pandemic spread across the globe, a majority of countries announced the temporary closure of schools, impacting more than 91% of students worldwide. By April 2020, close to 1.6 billion children and youth were out of school, and nearly 369 million children who rely on school meals needed to look for other sources for daily nutrition. Never before have so many children been out of school at the same time, disrupting learning and upending lives, especially the most vulnerable and marginalized. The global pandemic has far-reaching consequences that may jeopardize hard-won gains in improving global education. Our next goal is about gender equality. Gender equality is achieved when women, men, girls and boys have equal rights, conditions, and opportunities and the power to shape their own lives and contribute to the development of society. Empowering women and promoting gender equality is crucial to accelerating sustainable development. Ending all forms of discrimination against women and girls is not only a basic human right, but it also has a multiplier effect across all other development areas. What do we mean by empowerment? It relates to the process of becoming stronger and more confident, especially in controlling one's life and claiming one's rights. Discrimination is the act of making unjustified distinctions between human beings based on the categories to which they are perceived to belong. An example of a category is gender. There has been progress over the last decades. More girls are going to school. Fewer girls are forced into early marriages, and more women are serving in parliament and positions of leadership. And laws are being reformed to advance gender equality. Despite these gains, many challenges still remain. The coronavirus outbreak worsens existing inequalities for women and girls everywhere, from health and the economy to society and social protection. The pandemic has also led to a steep increase in violence against women and girls. With lockdown measures in place, many women are trapped at home with their abusers, struggling to access services that are suffering from cuts and restrictions. Emerging data shows that since the outbreak of the pandemic, violence against girls and women, and particularly domestic violence, has intensified. Let's talk about goal number 9, which is about industries, innovation, and infrastructure. Innovation and technological progress are key to finding lasting solutions to both economic and environmental challenges, such as increased resource and energy efficiency. Globally, investment in research and development as a proportion of GDP increased from 1.5% in the year 2000 to 1.7% in 2015 and remained almost unchanged in 2017, but was less than 1% in developing regions. We need this figure to increase in developing nations. What do we mean by industries? It refers to a group of manufacturers or businesses that produce a particular kind of goods or services. Innovation, the action or process of making changes in something established, especially by introducing new methods, ideas, or products. And infrastructure, it relates to the physical structures and facilities needed for the operation of a society or enterprise. Global manufacturing growth has been steadily declining, even before the outbreak of the COVID-19 pandemic. This pandemic is hitting manufacturing industries hard and causing disruptions in global value chains and the supply of products. The coronavirus pandemic has revealed the urgent need for resilient infrastructure. The Asian Development Bank notes that critical infrastructure in region remains far from adequate in many countries, despite the rapid economic growth and development the region has experienced over the past decade. The Economic and Social Survey of Asia and the Pacific highlights that making infrastructure resilient to disasters and climate change will require an additional investment of 434 billion per year. This sum may need to be even greater in some sub-regions, such as the Pacific Small Island Developing States. And lastly, goal number 17, partnerships for the goals. The SDGs can only be realized with strong global partnerships and cooperation. A successful development agenda requires inclusive partnerships at the global, regional, national, and local levels, built upon principles and values, and upon a shared vision and shared goals, placing people and the planet at the center. Many countries require official development assistance to encourage growth and trade, yet aid levels are falling and donor countries have not lived up to their pledge to ramp up development finance. Due to the COVID-19 pandemic, the global economy is projected to contract sharply by 3% in 2020, experiencing its worst recession since the Great Depression. Strong international cooperation is needed now more than ever to ensure that countries have the means to recover from the pandemic, build back better, and achieve the sustainable development goals. So now about women in innovation. UNESCO's commitment to women in innovation. UNESCO is committed to technology and innovation for gender equality. Over the next 5 years, UNESCO will increase access for girls and women to digital skills and competencies, STI and STEM education opportunities, including engineering, computer science, and informatics, to ensure gender equality in emerging STI fields such as nanotechnologies, engineering for the SDGs, and artificial intelligence. Provide access to STEM education to at least 2,000 girls per year in Africa through hands-on microscience, and enable at least 2,000 women physicians every year globally under a program, Physics Without Borders, to take leadership roles among relevant university research programs. Advance the scientific careers of young women scientists and give visibility to their scientific work in all related fields of technology and innovation through its partnership with L'Oréal UNESCO Women in Science program and the Organization for Women Scientists in Developing Countries. Support member states to review their national STEM education systems from a gender perspective, develop, monitor, and evaluate gender transformative STI policies and systems, particularly in Africa. Support member states to close the digital gender divide, promote universal digital literacy and the ethical use of AI that is free from gender bias and stereotypes through the implementation of a global recommendation on ethics of AI. And UNESCO will invest $24 million US. Now let's take a look, let's watch a video about women in innovation.
We do a disservice to society as a whole if we are not providing the same kinds of encouragement to women to contribute as we do to men. So to me, it's all about understanding, that inherently women and men are of equal worth, have equal amounts to contribute, and we absolutely need to make sure that we are getting those contributions from women. I'm Ellen Ochoa, an inventor, a NASA astronaut, and director of Johnson Space Center. People often ask me, if I decided I wanted to be an astronaut when I was a little girl, and I say, well, of course I was following the Apollo program. I mean, I think everybody in the country was following the Apollo program, and I was 11 when they landed on the moon for the first time.
Tranquility Base here. The Eagle has landed.
Nobody was going to ask a girl at that time, hey, do you want to grow up and become an astronaut? Because women weren't astronauts and really weren't allowed to be astronauts.
A-minus 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And liftoff of Space Shuttle Discovery.
It is a really exciting ride. You're at once you're trying to sort of experience the ride, but you're also paying attention to what's going on because you have to be ready at any second. The year before I went on this mission, I had been named to a presidential commission on the celebration of women in American history. So one of the things I thought of as I was going through this commission, knowing that I was going to be heading into space and that there were 3 women on the flight, was to get one of these flags from the National Women's Party that was used in the early part of the 20th century as women were fighting for the right to vote. So I was able to get a flag and to bring it with me into space, and then to be able to unfurl it in the new International Space Station, which was so significant because of the part that it played in getting women the right to vote. Getting a patent wasn't something I'd ever thought about when I first went to graduate school, or even, probably most of the way through my research. But we got to a point where I think my main thesis advisor, Professor Goodman, suggested that we talk to our, patent and technology office at Stanford. I certainly never thought of myself as an inventor, and I didn't go to graduate school to become an inventor or to get a patent. It really kind of came up as part of the process. I mean, there's so many different ways that invention and innovation are used in our society today, but it is a way that people can contribute from all walks of life. I never really thought about being a mentor to others till I was well into my career. And yet I see college students who are wonderful mentors to high school students. I see high school students who are wonderful mentors to middle school students. I wish I had thought a little bit more about that when I was those ages, but you don't have to wait, till you're older to really make an impact on other people's lives. I know myself how important it is to see somebody else doing that maybe you have something in common with or can relate to in some way. It was certainly an inspiration for me when the first 6 women were selected for the astronaut program, and Sally Wright in particular, because she was a physics major like me and because she went to Stanford, which is where I went for graduate school. And that helped me picture myself as an astronaut, which really seemed, like such a impossible dream. So I know how powerful that can be. And if there's anything that I can do to help students, just dream bigger dreams, have bigger goals, think about doing more than maybe they would have otherwise, then that's just hugely rewarding to me. I think about how I draw inspiration for the women who came before me and how meaningful that is to me, and to think that I might have that role in other women's lives. I think it's just another gift that I've gotten from NASA with what I've been able to do there.
Very inspiring video. Let's now discuss about the focus sector for today. Today is about accounting and finance. So accounting and finance involves the concepts of money, business and management, with an emphasis on professional careers in these areas. Accounting relates to information analysis for different aspects of a business, while finance solely concerns a business monetary funds. One will be getting numerous job opportunities and career options after obtaining a well-recognized accounting and finance diploma or degree. If you believe that you have a strong analytical mind and numeracy skills and are confident that you can efficiently manage money, you can be successful in the area of accounting and finance. But how can one be innovative in this sector? We'll talk about 3 innovators, starting with Justin Hutch. He is an operations manager, chief executive officer, and entrepreneur, best known for Rich Accounting, which takes away the complexity of accounting for small business owners. Justin started Rich Accounting back in 2015 because in his younger years, he had real challenges with accounting. He did not understand what was happening with his books. He didn't know what was the balance sheet supposed to do. He only relied on the profit and loss statement. He didn't even know what the cash flow statement was, let alone knowing how to use it. So when he resigned from the company that he was at and decided to start a new business, he thought through all the pain points that he had dealt with when he was running his business and thought if there was any way that he can in some little way affect a small business so that they don't have to endure some of the pains that he himself had to endure. And if he can in some way help them to become more successful, then he would have succeeded. Rich Accounting helps absorb complexity in the financials. It is a program that effectively gathers and delivers real-time data from all disparate systems and placing it all in a platform where users can analyze business data and visualize data as advisory reports or financial dashboard. We'll talk about Michael Bloomberg. I'm sure he's a well-known name to most of us. He's an author, trader, philanthropist, politician, and entrepreneur, best known for the Bloomberg Terminal, which provides real-time financial data, news, and analytics. Bloomberg was designing in-house computerized financial statements for Salomon Brothers in the 1970s. As real-time data is of utmost importance in the world of finance, Bloomberg set up a financial data services company named Innovative Market Systems, based on the belief that Wall Street would pay a premium for high-quality business information, delivered instantaneously on computer terminals in a variety of usable formats. The company sold customized computer terminals that delivered real-time market data, financial calculations, and other analytics to Wall Street firms. The terminal, first called the Market Maker Terminal, was released in December 1982. In 1986, the company renamed itself Bloomberg. Bloomberg uses the power of technology to provide real-time and accurate data for the financial markets to help decision makers make faster and smarter decisions. Rod Drury. He is an accountant, computer programmer, and entrepreneur, best known for the Zero Cloud accounting software. Rod saw that there was a transition from desktop software to the cloud globally. Small business was an incredibly fragmented market that didn't have any great software. Zero was started to change the game for small business. The beautiful cloud-based accounting software connects people with the right numbers anytime, anywhere, and on any device. Both accountants and clients can view their data at the same time from anywhere in the world with just an internet connection. And at Empire Code, we ourselves actually use Zero. Here are some of the job options available for a person with an accounting and finance diploma or degree. In accounting, you can choose to be an accounts administrator, accounting assistant, auditing clerk, bookkeeper, budget analyst, certified public accountant, chief financial officer, corporate controller, financial analyst, financial controller, forensic accountant, internal auditor, loan officer, management accountant, payroll clerk, staff accountant, or tax manager. In finance, you can choose to be an actuary, bank manager, bank teller, branch manager, corporate banker, financial analyst, insurance sales specialist, investment analyst, marketing manager, portfolio manager, private wealth banker, regulatory compliance officer, trader, quantitative analyst, or a venture capitalist. Now we're going to discuss about the industry innovation trends. Here are the 6 biggest trends. Number 1, artificial intelligence. 2, big data. Number 3, blockchain. 4, cloud computing. Number 5, Internet of Things. And lastly, robotic process automation. We'll be going to the first one, which is about artificial intelligence. Artificial intelligence, also known as AI, can help accounting and finance professionals be more productive, AI algorithms can take over time-consuming, repetitive, and redundant tasks, thus streamlining operations to reduce costs and errors. The more finance professionals rely on AI to do what it does best, which is to analyze and process a tremendous amount of data and take care of monotonous tasks, the more time that they have to focus on revenue or customer-related activities. AI has changed the expectation clients have when dealing with companies, and it's the same for accounting. AI helps accountants to be more efficient. We're going to watch a video to understand what is artificial intelligence, the difference between AI, machine learning, and deep learning, and the examples of artificial intelligence.
Picture this, a machine that could organize your cupboard just as you like it, or serve every member of the house a customized cup of coffee. Makes your day easier, doesn't it? These are the products of artificial intelligence. But why use the term artificial intelligence? Well, these machines are artificially incorporated with human-like intelligence to perform tasks as we do. This intelligence is built using complex algorithms and mathematical functions. But AI may not be as obvious as in the previous examples. In fact, AI is used in smartphones, cars, social media feeds, video games, banking, surveillance, and many other aspects of our daily life. The real question is, what does an AI do at its core? Here is a robot we built in our lab, which is now dropped onto a field. In spite of a variation in lighting, landscape, and dimensions of the field, the AI robot must perform as expected. This ability to react appropriately to a new situation is called generalized learning. The robot is now at a crossroad, one that is paved and the other rocky. The robot must determine which path to take based on the circumstances. This portrays the robot's reasoning ability. After a short stroll, the robot now encounters a stream that it cannot swim across. Using the plank provided as an input, the robot is able to cross this stream. So, our robot uses the given input and finds the solution for a problem. This is problem solving. These three capabilities make the robot artificially intelligent. In short, AI provides machines with the capability to adapt, reason, and provide solutions. Well, now that we know what AI is, let's have a look at the two broad categories an AI is classified into. Weak AI, also called narrow AI, focuses solely on one task. For example, AlphaGo is a maestro of the game Go, but you can't expect it to be even remotely good at chess. This makes AlphaGo a weak AI. You might say Alexa is definitely not a weak AI, since it can perform multiple tasks. Well, that's not really true. When you ask Alexa to play Despacito, it picks up the keywords play and Despacito and runs a program it is trained to. Alexa cannot respond to a question it isn't trained to answer. For instance, try asking Alexa the status of traffic from work to home. Alexa cannot provide you this information, as she is not trained to. And that brings us to our second category of AI, strong AI. Now, this is much like the robots that only exist in fiction as of now. Ultron from Avengers is an ideal example of a strong AI. That's because it's self-aware and eventually even develops emotions. This makes the AI's response unpredictable. You must be wondering, well, how is artificial intelligence different from machine learning and deep learning? We saw what AI is. Machine learning is a technique to achieve AI, and deep learning, in turn, is a subset of machine learning. Machine learning provides a machine with the capability to learn from data and experience through algorithms. Deep learning does this learning through ways inspired by the human brain. This means through deep learning, data and patterns can be better perceived. Ray Kurzweil, a well-known futurist, predicts that by the year 2045, we would have robots as smart as humans. This is called the point of singularity. Well, that's not all. In fact, Elon Musk predicts that the human mind and body will be enhanced by AI implants, which would make us partly cyborg.
Next, let's take a look at the impact of artificial intelligence in the accounting and finance world. The impact on audits. Data analytics is very important for auditors. It helps them to easily establish the scope of the audit and carry out a risk assessment. Robotic process automation and analytics facilitate tracking records for the audit of routine transactions. Cognitive computing, AI, and predictive analytics help with the more complex and non-routine transactions that require estimates and judgments. Artificial intelligence automates many tasks that were previously done manually, such as ingesting data. It analyzes 100% of the data set without requiring a human to create tests, write scripts, or remember all the rules. Key to the future of audit is that AI is changing the definition of reasonable assurance by understanding the entirety of the ledger and identifying anomalies based on risks rather than rules. Digitalization in the audit process has led to the enhancement of the security level. Each file that is accessed can be tracked by auditors using a digital tracker. It makes it possible for auditors to work better and smarter by probing into the digital files rather than spending too much time searching through all the paper documentations. And it enables them to use their human judgment to analyze a broader and deeper set of data and documents. Hence, digitalization process in auditing provides improved accuracy of audit. Artificial intelligence in accounting and auditing helps to record every financial transaction of the company. It will help auditors to become more efficient, therefore increasing productivity and helping their organizations meet their goals. Next, for cash flows. AI empowers businesses with financial management tools to quickly and easily reconcile the organization's activity and understand their historic cash flow statement and future cash requirements. It shows trends both forward and backward in time. AI tools, devices, or AI applications not only speed up your processes, but also make your financial processes accurate and secure. The AI-powered systems can collect data from various sources and integrate that data. The AI-powered machines make your quarterly, monthly cash flow collected in no time and consolidate it easily. What is impact on chatbots? AI-driven chatbots are developed to solve users' queries more efficiently. The queries may include the latest account balance details, statements, credit bills, and account status, etc. With the help of chatbots, your finance team can track outstanding invoices and automate the follow-up process to ensure that invoices are paid and closed promptly. AI chatbots can also be used to allow employees in other departments like sales or marketing to more efficiently report and track business expenses by submitting receipts directly to the board or by answering simple questions like, do I have any outstanding expense reports? Or when will I be reimbursed for this business expense? AI chatbots even answer everyday questions from customers and are increasingly becoming capable of handling tier 1 level support. Additionally, they can answer questions about your latest account balances, the due date of certain bills, the status of accounts, and more. Therefore, AI helps accountants in many ways. Many aspects of financial services involve a series of tasks that become tedious owing to the manual validation, assessment, and verification of data. AI not only allows accounting companies, but also tech companies to solve problems in ways we have never considered, thanks to the data that we are equipped with. How does AI help with expense management? The AI-powered system can replace humans by taking over all the tedious tasks that were previously done manually, thus saving a lot of time. They are more quick and efficient. The task of revising and finalizing expenses to confirm that they are compliant according to the company's norms is a difficult one. The manual process consumes more data and more time for your finance team. AI will speed up the process because instead of the possibility of human error, the chain will be entirely digital, allowing for tighter, more precise review. AI machines can also read all receipts, audit costs, and also alert the human workforce when a breach is occurred. Pay receive processing. Traditionally, invoice processing has been one of the most time and cost-consuming jobs done manually in any firm. Invoices worth billions are processed, and accounts payable is one process that mid to large-sized companies cannot elude. However, one needs to go through every email, download invoices, verify and extract the data manually, and finally process the payments. In this digital world, the need to automate invoice processing has become important to improve accounting, increase the volume, get zero error processing, and maintain vendor relationships. Digital transformation in accounting and finance has gone to another level, thanks to AI-based invoice management systems that help finance clients in making invoice processing efficiently. Due to technology advancements in the finance sector, digital machines using AI are learning the accounting codes that best suit for every invoice. Procurement. According to a recent report conducted by Gartner, AI technologies will add significant value if provided with the right platform. So application leaders in procurement need to drive better adoption of foundational procurement solutions. There is a lot of paperwork involved when it comes to filing the organization's procurement or purchasing methods. A large amount of records needs to be maintained on the systems that are not in connection with each other. As AI machines process unstructured data using APIs, the procurement process will be automated. Lastly, supplier onboarding. Using AI in your onboarding processes can help you reach a broader set of new customers while increasing revenue and differentiating your organization from the competition. The AI-powered systems can now access the suppliers by scrutinizing their tax details or credit scores. AI tools can set all suppliers in the systems without the involvement of a human. Also, they can set the query portals to get the required data. So how do we get started on learning about artificial intelligence? Here are a few recommendations. AI for Everyone, offered by deeplearning.ai on Coursera. Also on Coursera, we have AI Fundamentals for Everyone specialization offered by IBM. Artificial Intelligence for Finance, Accounting, and Auditing, offered by AI Essence on Udemy. And we have Learn with Google AI, offered by Google Education. And lastly, Innovations in Investment Technology, Artificial Intelligence, offered by the University of Michigan on Coursera. Here are some additional learning materials. We have Artificial Intelligence in Finance, Elon Musk on Artificial Intelligence, How to Harness Artificial Intelligence in Accounting by Ernst & Young, The Impact of Artificial Intelligence in Accounting Work, Expert Systems Used in Auditing and Tax by ResearchGate, and What is Artificial Intelligence Exactly by CoFusion. Next, we'll move on to the next innovation trend, which is big data. Data is crucial for all kinds of decisions. It refers to the stored information and recorded operation, which were performed by the computer in various forms. Big data can be understood as the same data being present in large amounts and numbers. This consists of information provided by both humans and their devices. Big data is so large and complex in its size and storage that it is unable to be deciphered and understood efficiently by the traditional data management tools. Present-day data no longer involves just numbers of Excel, worksheets, spreadsheets, which accountants have become familiar with for many decades. It also includes unstructured data that can be analyzed through natural language processing. Audit processes have also become digitalized. In finance, data provides valuable insights that drives results and provides a better experience for clients. Since everything leaves a digital footprint, the unprecedented digitalization of our world has created opportunities for us to gain insights from data that wasn't possible before. These insights help us improve business operations and increase revenue. Next, we're going to watch a video about big data. And in this video, we understand what exactly is big data, what is data, the three different types of data, which is structured, unstructured, and semi-structured, and the difference between structured versus unstructured data. And what's the difference between machine-generated data versus human-generated data? And we'll have a few examples of machine data.
Subscribe to our channel and press the bell icon to stay updated with Knowledge Hut.
Hello and welcome to Knowledge Hut. In this video, let's learn about what big data is and how it's classified. Let us begin by defining the term data. If you do a quick Google search, then you will find that data is defined as the qualities, characters, or symbols on which operations are performed by a computer, which may be stored and transmitted in the form of electrical signals and recorded on magnetic, optical, or mechanical recording media. In simple words, we can say that all the facts and figures which can be stored in digital format can be termed as data. All the text, numbers, images, audios, videos stored in our phones and computers are some examples of data. They are all digitally stored and comprised of zeros and ones. Please remember that data is a plural term. The singular term for data is datum. The concept of big data is nothing complex. As the name suggests, big data refers to copious amounts of data, which are too large to be processed and analyzed by traditional tools. Since the amount of big data increases exponentially, more than 500 terabytes of data are uploaded to Facebook's database alone in a single day. It represents a real problem in terms of analysis. So you may be thinking that if this big data is so problematic, then why is everyone so obsessed about it? Well, the answer lies in the benefits it provides. Here are some real-world examples of the ways in which big data is used. Netflix collects user behavior data from its more than 100 million customers. This data helps Netflix in understanding what every individual customer wants to see. Based on the analysis, it recommends movies and TV shows which the viewer will love to watch. As a result, the customer is happy because he is getting what he likes without even searching for it. And Netflix is happy because it has delighted its customers, which will result in higher customer retention. Credit card companies collect and store the real-time data of when and where the credit cards are being swiped. This data helps them in thwarting fraud detection. Suppose a credit card is used at location A for the first time. Then after 2 hours, the same card is being used at location B, which is 5,000 kilometers away from location A. Now, it is practically impossible for a person to travel 5,000 kilometers in 2 hours, and hence it becomes clear that someone is trying to fool the system. These were just two examples. Big data has hundreds of different applications in hundreds of different fields, be it banking, communication, healthcare, media, advertising, manufacturing, transportation, and retail. Big data can be used everywhere, and this is why more and more businesses are trying to harness its power. Classification is essential for the study of any subject. So big data is widely classified into three main types, which are structured, unstructured, and semi-structured data. Structured data. Structured data is used to refer to the data which is already stored in databases in an ordered manner. It accounts for about 20% of the total existing data and is used the most in programming and computer-related activities. There are two sources of structured data, machines and humans. All the data received from sensors, web logs, and financial systems are classified under machine-generated data. These include medical devices, GPS data, data of usage statistics captured by servers and applications, and the huge amount of data that usually move through trading platforms, to name a few. Human-generated structured data mainly includes all the data that humans input into computers, such as names and other personal details. When a person clicks a link on the internet or even makes a move in a game, data is created. This can be used by companies to figure out their customers' behavior and make the appropriate business decisions and modifications. Unstructured data. While structured data resides in the traditional row column databases, unstructured data is the opposite. They have no clear format in storage. The rest of the data created, about 80% of the total, account for unstructured big data. Most of the data a person encounters belong to this category, and until recently, there was not much to do except storing it or analyzing it manually. Unstructured data is also classified based on its source, machine-generated or human-generated. Machine-generated data accounts for all the satellite images, the scientific data from various experiments, and radar data captured by various facets of technology. Human-generated unstructured data is found in abundance across the internet, since it includes social media data, mobile data, and website content. This means that the pictures we upload to Facebook or Instagram handle, the videos we watch on YouTube, and even the text messages we send, it all contributes to the gigantic heap that is unstructured data. Semi-structured data. The line between unstructured data and semi-structured data has always been unclear, since most of the semi-structured data appear to be unstructured at a glance. Information that is not in the traditional database format as structured data, but contains some organizational properties which make it easier to process, are included in the semi-structured data. For example, no SQL documents are considered to be semi-structured, since they contain keywords that can be used to process the document easily. Big data analysis has been found to have definitive business value, and its analysis and processing can help a company achieve cost reductions and dynamic growth. So it is imperative that you do not wait too long to exploit the potential of this excellent business opportunity. This was all about big data and the types of big data. Don't forget to subscribe to Knowledge Hut for more.
Next, we'll look at the impact of big data in the accounting and finance world. The first one, on audit analytics. Internal and external auditors have been at the forefront of the use of big data in the accounting industry. Nowadays, the traditional approaches to auditing, which includes analyzing billions of transactions in a ledger based on sampling, are not used anymore. Though auditors still work on large data sets, audit analytics enables them to visualize the wide range of financial and non-financial data. It helps identify exceptions and pressure points so that auditors can focus on greater areas of risk to predict outcomes that will improve forecasting. What about the impact on data analytics? Big data contains a large volume of unstructured data that is about to be organized. Applying data analytics to big data creates several opportunities for accounting firms to gain significant insights, predict future outcomes, and automate non-routine financial tasks. An accountant must learn technical and analytical skills to handle statistics and run large data sets with data mining and statistical analysis tools, such as the statistical analysis system to their knowledge base. In the era of big data, it will help businesses develop greater value and transform their decision-making skills. Its impact on data visualization. With the help of the visualization software such as Tableau, accountants gain the ability to see large amounts of data, which in turn allows users to see patterns, flows, irregularities, and exceptions more easily. These tools have helped accountants to see data in ways that were not possible previously using traditional methods, and have made it easier to link together data from various sources to provide new insights to the reports. Also, they are made it possible for accountants and CPAs to perform advanced statistical analysis of data using more variables, real-time data, and advanced modeling. Its impact on real-time access. Modern accountancy methods require you to deliver tasks strategically within a given time frame every month. But the traditional record-to-report methods limit the visibility of data, thereby making it difficult to complete the task every month before the books are closed. Having real-time access to accounting data is the only way forward, as it helps you keep you in sync with the broader business calendar. Instantly corrects errors in reports and escalates efficiency, saving both time and money. Utilizing big data for analyzing reports can help make better business decisions and set meaningful performance benchmarks. Lastly, for risk identification. Providing risk-free financial services to customers is essential for firms these days, as voluminous data comes with a large number of security threats. Big data enables accountants to proactively identify issues with real-time access to the data so that accounting businesses can base their decision-making more on hard evidence and facts, rather than emphasizing on guesswork and assumptions about customers, employees, and vendors. To conclude, with the ever-increasing data, CPAs must have the ability to utilize the latest technology and tools to analyze financial data. This will help them improve client experience, provide greater assurance over financial statements, and increase the decision support that they give to make their business thrive. Therefore, top accounting firms must integrate big data techniques seamlessly into their business models to achieve this transformation. But in the end, using big data and analytics in any industry can be challenging, as it comes with many contingencies around the quality of data, the data sources, and the choice of data sets that need to be understood adequately while using big data. So how do we get started if you want to learn more about big data? We have a few recommendations here. Firstly, the applied data science with Python specialization offered by the University of Michigan on Coursera. Big data specialization offered by the University of California, San Diego on edX. Data science specialization offered by Johns Hopkins University on Coursera. Introduction to big data offered by the University of California, San Diego on Coursera. And Introduction to Data Science offered by Metis. For additional learning materials, we have Big Data and Analytics, the impact on the accountancy profession. Big data and the financial services industry, from data to insights. Big data tutorial for beginners by Edureka. Current landscape and influence of big data on finance. How big data can make big impact. Findings from a systematic review and longitudinal case study by ResearchGate. Next, we'll move on to another industry trend, which is blockchain. So what is blockchain? Blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or change the system. A distributed ledger or blockchain is a highly secured database. It securely stores and accurately records data, which has broad implications in accounting and financial records. Some advantages of blockchain include enabling smart contracts, protecting and transferring ownership of assets, and verifying people's identities and credentials. Once blockchain is widely adopted and approved more extensively by industries and governments, it can benefit businesses by reducing costs, increasing traceability, and enhancing security. In the next video, we'll understand what is blockchain, how do they work, and why blockchains are so special.
Blockchains are incredibly popular nowadays. But what is a blockchain? How do they work? What problems do they solve? And how can they be used? Like the name indicates, a blockchain is a chain of blocks that contains information. This technique was originally described in 1991 by a group of researchers and was originally intended to timestamp digital documents so that it's not possible to backdate them or to tamper with them, almost like a notary. However, it went by mostly unused until it was adapted by Satoshi Nakamoto in 2009 to create the digital cryptocurrency Bitcoin. Now, a blockchain is a distributed ledger that is completely open to anyone. They have an interesting property. Once some data has been recorded inside the blockchain, it becomes very difficult to change it. So how does that work? Well, let's take a closer look at a block. Each block contains some data, the hash of the block, and the hash of the previous block. The data that is stored inside a block depends on the type of blockchain. The Bitcoin blockchain, for example, stores the details about a transaction in here, such as the sender, receiver, and the amount of coins. A block also has a hash. You can compare a hash to a fingerprint. It identifies a block and all of its contents, and it's always unique, just as a fingerprint. Once a block is created, its hash is being calculated. Changing something inside the block will cause the hash to change. So in other words, hashes are very useful when you want to detect changes to blocks. If the fingerprint of a block changes, it no longer is the same block. The third element inside each block is the hash of the previous block. And this effectively creates a chain of blocks, and it's this technique that makes the blockchain so secure. Let's take an example. Here we have a chain of 3 blocks. As you can see, each block has a hash and the hash of the previous block. So block number 3 points to block number 2, and number 2 points to number 1. Now the first block is a bit special. It cannot point to previous blocks because, well, it's the first one. We call this block the Genesis block. Now let's say that you tamper with the second block. This causes the hash of the block to change as well. In turn, that will make block 3 and all following blocks invalid because they no longer store a valid hash of the previous block. So changing a single block will make all following blocks invalid. But using hashes is not enough to prevent tampering. Computers these days are very fast and can calculate hundreds of thousands of hashes per second. You could effectively tamper with a block and recalculate all the hashes of other blocks to make your blockchain valid again. So to mitigate this, blockchains have something that is called proof of work. It's a mechanism that slows down the creation of new blocks. In Bitcoin's case, it takes about 10 minutes to calculate the required proof of work and add a new block to the chain. This mechanism makes it very hard to tamper with the blocks because if you tamper with one block, you'll need to recalculate the proof of work for all the following blocks. So the security of a blockchain comes from its creative use of hashing and the proof of work mechanism. But there is one more way that blockchains secure themselves, and that is by being distributed. Instead of using a central entity to manage the chain, blockchains use a peer-to-peer network and everyone is allowed to join. When someone joins this network, he gets a full copy of the blockchain. The node can use this to verify that everything is still in order. Now, let's see what happens when someone creates a new block. That block is sent to everyone on the network. Each node then verifies the block to make sure that it hasn't been tampered with. And if everything checks out, each node adds this block to their own blockchain. All the nodes in this network create consensus. They agree about what blocks are valid and which aren't. Blocks that are tampered with will be rejected by other nodes in the network. So to successfully tamper with a blockchain, you'll need to tamper with all the blocks on the chain, redo the proof of work for each block, and take control of more than 50% of the peer-to-peer network. Only then will your tampered block become accepted by everyone else. So this is almost impossible to do. Blockchains are also constantly evolving. One of the most recent developments is the creation of smart contracts. These contracts are simple programs that are stored on the blockchain and can be used to automatically exchange coins based on certain conditions. More on smart contracts in a later video. The creation of blockchain technology piqued a lot of people's interest. Soon others realized that this technology could be used for other things, like storing medical records, creating a digital notary, or even collecting taxes. So now you know what a blockchain is, how it works on a basic level, and what problems it solves. Want to learn how you can implement a simple blockchain in JavaScript? Then check out this video here. And as always, thank you very much for watching.
Next, we'll talk about what is the impact of blockchain in accounting and finance. Firstly, it allows for easier reconciliation. The end-of-month chores may become less of a burden. Accountants can start using smart contracts to automate reconciliation tasks. We will create reduced auditing. Many accountants are excited about blockchain simply because it can lead to much less audits in the future. Auditors can automate most auditing functions through the power of smart contracts. Auditing can be fast and easy, thanks to its inherent traceability of everything that is recorded on the blockchain. And since everything is automated, blockchain can reduce the time an auditor needs to spend checking the books. This will also result in reduced costs. No matter the system, a reduction in errors and increase in efficiency results in reduced costs. When making the switch from conventional accounting systems to the blockchain, accounting firms can expect to see cost savings quite quickly. The initial adoption costs should be well worth it. Number 4, it can reduce errors. Data entry is perhaps the area where blockchain can definitely help the most. It's where chances of human error are also the highest. Blockchain can significantly reduce human error by making most accounting functions automatic. To add, accounting is currently based on a double entry bookkeeping system in which the accountant and independent auditor input and verify a company's financial information. With blockchain technology, there's no longer a need for this kind of redundancy, since the data can be verified without another party. It's a complete automated digital audit of each individual transaction. Blockchain can also be leveraged to improve traditional accountancy and fight accounting fraud. It's challenging to commit fraud using blockchain due to its immutable nature. Modifying a record on a blockchain is highly infeasible, as the actor will have to make the same change on all copies of the distributed ledger simultaneously. Blockchain can also improve efficiency by being designed to make it more efficient than legacy accounting software. It's more challenging to get data into and out of accounting software. It's definitely a lot easier using blockchain. And lastly, improve regulatory compliance. Agencies must go through a lot to satisfy regulatory demands. Blockchain can help take off the burdens, thanks to the enhanced security it offers. Blockchain may even become mandatory in some financial sectors as more regulatory authorities embrace this technology. So how do we get started if you are keen on blockchain? A few of our recommendations include Blockchain and Bitcoin Fundamentals, Blockchain Theory 101, Blockchain Understanding its Users and Implications, Harness the Power of Blockchain and Cryptocurrencies, and lastly, Introduction to Enterprise Blockchain. For additional learning materials, you can tap on Blockchain and the Future of Accountancy, Blockchain in Accounting Research and Practice, Current Trends and Future Opportunities, How Blockchain Can Disrupt Banking, How Blockchain Innovation Could Affect the Audit Profession, a qualitative study, and lastly, Where Accounting Really Stands with Blockchain. Next, we'll move on to the next trend, which is cloud computing. Advances in computing power have allowed the accounting and finance sector to store and use data effectively. With cloud services, we now have scalable software that can be accessed anytime and anywhere. Companies with offices globally are now able to share the same system, making data sharing efficient. Edge computing, where the computing happens right where the data is collected, not in the cloud, has also grown. Faster networking technologies such as 5G cellular network technology are allowing for edge computing systems to accelerate the creation or support of real-time applications, such as video processing and analytics. And when quantum computing is fully adopted, it will catapult our computing power exponentially. Quantum computers perform calculations based on the probability of an object state before it is measured. Quantum computers will be able to provide services and solve problems that were not possible with traditional computers. There will be tremendous value in the accounting and finance world with this capability. For example, some examples of cloud computing include Google Documents, Microsoft Office 365. Users can access Google Docs and Microsoft Office 365 through the internet. Users can be more productive because they can access Word presentations and spreadsheets stored in the cloud at any time from anywhere on any device. Emails, calendars, Skype, and WhatsApp take advantage of the cloud's ability to provide users with access to data remotely so that they can access their personal data on any device, whenever and wherever they want. For example, Zoom, this is a cloud-based software platform for video and audio conferencing that records meetings and saves them to the cloud, enabling users to access them anytime and anywhere. We'll showcase two videos. The first one, we understand what is cloud computing and the advantages of cloud computing and how it differentiates from traditional web hosting. And in the second video, we'll talk about what is edge computing and the devices that are impacted by it.
Technically, most of it is in cables under the ocean, but well, you get the idea. The internet is synonymous with the cloud. At the consumer level, it usually refers to photo, video, or document storage, like iCloud, OneDrive, or Dropbox, that can be accessed from anywhere. But cloud computing actually refers to anything that involves delivering services over the internet, as opposed to hardware or software installations on individual devices. It all divides into three services: platform as a service, infrastructure as a service, and software as a service. Platform as a service is a model in which a third-party provider hosts app development platforms and tools on its own infrastructure, available to customers over the internet. PaaS models are used for general software development. Infrastructure as a service providers host servers, storage, and other individualized resources over the internet. IaaS offers a variety of storage and memory options for any workload need. And most commonly encountered at the consumer level, software as a service is software distribution from a third-party provider, making applications available over the internet, like Microsoft Office 365 for productivity and email, or Salesforce and NetSuite for enterprise use. A cloud can be public, selling services to anyone on the internet, or private, supplying services to select individuals. Offerings include Amazon Web Services, Microsoft Azure, IBM Cloud, and Google Cloud Platform. In the end, all cloud services share the same goal: to provide easy, scalable access to resources and services. Specific benefits include self-service provisioning, elasticity, pay-per-use, workload resilience, and migration flexibility.
Is edge computing and why it matters. Edge computing is exactly what it sounds like: computing that takes place at the edge of corporate networks, with the edge defined as the place where end devices access the rest of the network, things like phones, laptops, industrial robots, and sensors. The edge used to be a place where these devices connected so they could deliver data to and receive instructions and download software updates from a centrally located data center or the cloud. Now, with the explosion of the Internet of Things, that model has shortcomings. IoT devices gather so much data that the sheer volume requires larger and more expensive connections to data centers and the cloud. The nature of the work performed by these IoT devices is also creating a need for much faster connections between the data center or cloud and the devices. For example, if sensors and valves at a petroleum refinery detect dangerously high pressure in the pipes, shutoffs must be triggered as soon as possible. With analysis of that pressure data taking place at distant processing centers, the automatic shutoff instructions may come too late. But with processing power placed local to the end devices, latency is less, and that round-trip time can be significantly reduced, potentially saving downtime, damage to property, and even lives. Even with the introduction of edge devices that provide local computing and storage, there will still be a need to connect them to data centers, whether they are on premises or in the cloud. For example, temperature and humidity sensors in agricultural fields gather valuable data, but that data doesn't have to be analyzed or stored in real time. Edge devices can collect, sort, and perform preliminary analysis of the data, then send it along to wherever it needs to go, to centralized applications or some form of long-term storage, again, either on-prem or in the cloud. Because this traffic may not be time-sensitive, slower, less expensive connections, possibly over the internet, can be used. And because the data is pre-sorted, the volume of traffic that needs to be sent at all may be reduced. So the upside of edge computing is faster response time for applications that require it, and slowing the growth of expensive long-haul connections to processing and storage centers. The downside can be security. With data being collected and analyzed at the edge, it's important to include security for the IoT devices that connect to the edge devices and for the edge devices themselves. These devices contain valuable data, but there are also network elements that, if exploited, could compromise other devices that contain stores of valuable assets. With edge computing becoming more essential, it's also important to make sure that the edge devices themselves don't become a single point of failure. Network architects need to build in redundancy and provide failover contingencies in order to avoid crippling downtime if a primary node goes down. The industry has already gone a long way toward addressing the demands of edge computing, and it's becoming mainstream. Its importance is likely to grow even more as the use of real-time applications becomes more prevalent.
What's the impact of cloud computing in accounting? Cloud computing allows accountants to spend less time on administrative tasks such as data entry, chasing up documents, and spending more time on valuable revenue-generating activities. It means that accountants can do what they are trained to do, which is explain, work with numbers, and let them focus precisely on the growth of the business. On the accessibility of data and applications anywhere. One of cloud computing's best features is the fact that it allows your team to work from anywhere. When data and applications are stored in the cloud, they are accessible via any internet-enabled device. This is obviously useful for staff who work remotely, allowing them complete access to your system when they, for example, need to visit a client's office in person. The value of remote access has become especially clear since 2020, when the coronavirus outbreak drove many companies to close their doors and send staff home. Disasters of this scale have forced companies of all shapes and sizes to rethink business strategy. Maintaining productivity is critical to survival for you and your customers. Accounting firms use cloud computing. Using cloud computing can adapt quickly, as they can still securely access customer data from wherever they end up working, meaning they can be a rock for clients in times of crisis. Improve communications and efficiency. Your customers may have been content to communicate via phone or email a few decades ago, but today's clients want more hands-on ways to work with you. Another cloud computing benefit for accounting firms is the variety of ways it opens up to communicate with clients. Online dashboards, up-to-the-minute reporting, and unified communication systems. Your agency can just as easily serve a client down the street as around the world. Internal communications and processes also benefit when you make the switch to a cloud-based solution. Cloud calendars and email facilitate seamless communication between team members and departments. And because multiple people can access the same data simultaneously, your firm can eliminate redundancies and errors that occur when data is entered multiple times. Reducing costs with cloud computing. The subscription-based pricing model of most cloud solutions is the most attractive one for accounting firms. Choosing cloud lets you free yourself of the upfront hardware and software expenditures and the unexpected costs when they fail, associated with on-premise data storage in favor of regular, predictable monthly payments. Another cost-related cloud computing benefit for accounting firms is the savings you see when you no longer have to maintain an environmentally controlled facility for the servers holding your data. And when you are no longer responsible for all those machines, your IT team will also have more time for day-to-day support instead of focusing on server maintenance. Many accounting professionals also cite the ability to automate data entry as a major time saver when they transition to a cloud-based solution. Between the switch from capital expenditure to operating expenditure, the save space and the reduction of labor, it's clear that there are many cost-related cloud computing benefits for accounting firms. And lastly, strengthening data security. Every company wants to make sure that their data and business-critical information are secured, but for accounting firms who primarily handle other companies' data, security is even more important. Accounting firms using cloud computing can leverage the expertise and resources of their cloud partners to ensure that all data is rigorously protected in transit as well as in storage. Cloud security benefits for accounting firms include industrial strength physical security to protect against fire or other disasters, redundant backup systems to safeguard against data loss, professionally designed disaster recovery processes, end-to-end encryption to protect data moving to and from the cloud, and 24/7 monitoring for security threats. For you to get started on cloud computing, we have a few recommendations. The first one being business considerations for edge computing. Cloud computing concepts, getting started with cloud computing level 1, the quantum internet and quantum computers, how will they change the world? And understanding edge computing in the cloud computing world. Additional learning materials here. How quantum computing could change financial services. Impact of cloud computing. Accounting professionals' perspective. Managing the impact of cloud computing, perspectives on vulnerabilities, ERM and audit services. Role of cloud computing in global accounting information systems. And lastly, why edge computing matters in financial services. The next topic we'll touch on is the Internet of Things. The Internet of Things, IoT, describes the network of physical objects that are embedded with sensors, software, and other technologies used for the purpose of connecting and exchanging data with other devices and systems over the Internet. Intelligence of Things combines Internet of Things with artificial intelligence. These items can communicate and operate without human intervention and offer many advantages for accounting systems and finance professionals. The intelligence of things help finance professionals track records such as ledgers and transactions in real time. Through AI, patterns can be identified or issues can be resolved quickly. This continuous monitoring makes accounting activities such as audits streamlined and hence more efficient. In addition, the intelligence of things improves inventory tracking and management. Next, we watch two videos. The firstly is about the Internet of Things and the basic concepts and how it influences our lifestyle. And secondly, we'll understand what is the intelligence of things, how artificial intelligence infused into everyday objects will transform our experience of the world.
The Internet of Things, or IoT, is influencing our lifestyle from the way we react to the way we behave. From air conditioners that you can control with your smartphone, to smart cars providing the shortest route, or your smartwatch which is tracking your daily activities, IoT is a giant network of connected devices. These devices gather and share data about how they're used and the environment in which they are operated. It's all done using sensors. Sensors are embedded in every physical device. It can be your mobile phone, electrical appliances, vehicles, barcode sensors, traffic lights, and almost everything that you come across in day-to-day life. These sensors continuously emit data about the working state of the devices. But the important question is, how do they share this huge amount of data, and how do we put this data to our benefit? IoT provides the common platform for all these devices to dump their data and a common language for all the devices to communicate with each other. Data is emitted from various sensors and sent to IoT platforms securely. IoT platform integrates the collected data from various sources. Further analytics is performed on the data, and valuable information is extracted as per requirement. Finally, the result is shared with other devices for better user experience, automation, and improving efficiency. Let us look at a scenario where IoT is doing wonders. In an AC manufacturing industry, both the manufacturing machine and the belt have sensors attached. They continuously send data regarding the machine health and the production specifics to the manufacturer to identify issues beforehand. A barcode is attached to each product before leaving the belt. It contains the product code, manufacturer details, special instructions, etc. The manufacturer uses this data to identify where the product was distributed and track the retailer's inventory. Hence, the manufacturer can make the product running out of stock available. Next, these products are packed and parceled to different retailers. Each retailer has a barcode reader to track the products coming from different manufacturers, manage inventory, check special instructions, and many more. The compressor of air conditioner has an embedded sensor that emits data regarding its health and temperature. This data is analyzed continuously, allowing the customer care to contact you for the repair work in time. This is just one of the million scenarios. We have smart appliances, smart cars, smart homes, smart cities, where IoT is redefining our lifestyle and transforming the way we interact with technologies. The future of the IoT industry is huge. Business Insider Intelligence estimates that 24 billion IoT devices will be installed by 2020, and IDC predicts that IoT revenue will reach around 357 billion in 2019, resulting in a lot of job opportunities in the IT industry. Want to become a part of the IoT revolution? Come and master IoT with Edureka.
We've all heard the increasingly used trendy term, the Internet of Things, and how game-changing it's going to be as we extend sensors, miniature sensors into everyday objects. Everyday objects will start to give us real-time feedback, and the world essentially will come alive. This is the Internet of Things. But what if we evolve the term a little further? What if instead of the Internet of Things, we enter the realm of the intelligence of things? The intelligence of things is where the Internet of Things meets artificial intelligence. Because the future of artificial intelligence is senseless unless we extend it into the world of everyday objects. This idea that as we impregnate intelligence into the world of physical things that we inhabit, the world essentially will come alive. This real-time feedback, this interface that will become enlivened with intelligence will essentially will birth a world that will increasingly talk back to us. Now, how this will change human subjectivity, how this will change the human condition, the space of mind in which we dwell, is in the following way. Increasingly, we'll dovetail our minds to the world, right? And as the world starts talking back, the distinction between self and world will start to disappear. The external space, the external world will increasingly start to feel like an extended extension of our mind, like an extension of our agency, which will bleed over into a world of predictability, a world that will know what we want before we want it, a world of serendipity, a world in which you look for something, you find something else, and you realize that what you found was more conducive to your needs than what you thought you were looking for. We're talking about a world optimized in human creativity and human enterprise, a world that is responsive, a world that is alive, a world that is intelligent as I imagine, so it becomes. This is the very essence of magic. Now, you're pumping all this data, you're pumping all this AI into sensors, into the world of everyday objects, and again, you birth the world, the intelligence of things. The mind will fully turned itself inside out. We will be inhabiting the condensation of human imagination. The nodes in our brain, the neurons will have spilled out into the world. We will cloak the planet in mind and data. This, my friends, is a singularity of mind and meaning. When everything becomes linked with everything else, matter becomes mind. This is the intelligence of things.
So what's the impact on the industry? The first impact on assets tracking. Fixed asset vehicles and inventories can be confirmed along with their locations tracked automatically. Companies can use RFID tags and handheld scanners to confirm the items are stocked in a warehouse, and this facilitates automated stock checking. For geographically dispersed assets, the broadcast of GPS coordinates can monitor asset location. This increases the chances of catching thieves. Also, in the case of migration, this will reduce costly production downtime. To drill down into detailed financial data, companies can use asset tracking information into their enterprise resource planning and data warehouse. Now, audits can be carried out more effectively as locations are more precise and issues will be more obvious. Moreover, the use of RFID tags cut the cost of reducing manual error, losses, and costs of theft. Better decision-making and business information. Bringing things together provides greater opportunities. This is the level where accountants and CPAs can make great deals. They are responsible for creating strategies to grow business in future. Accountants who can combine the range of IoT collected data with financial information have better chances of addressing the root cause of the issues. Priorities can be set for improvements by analyzing data on asset utilization, cost, quality, and risk. Companies can work with Lean Six Sigma continuous improvement programs. Using IoT, digital twin, CCTV, and augmented reality, it is easy to fully visualize processes within and between organizations. This may improve efficiency and fasten the time to deal with problems. In addition, IoT data can be analyzed and combined to help businesses make better strategic and investment decisions. The process of planning and budgeting can also be enhanced with improved data quality. Cost saving. Improvements in information quality enable accountants to better use the cost methodologies at their disposal. For example, sensors can be placed to monitor machine runtimes and labor activities to help with more accurate and timely absorption costing. With the help of IoT, you can automate the labor data collection. Moreover, using data to measure the actual energy usage of machines can reduce energy costs. IoT can be used to monitor usage patterns and maximize the time required available to change batteries and off the electricity while maintaining a continuous energy supply. For preventing expensive manufacturing, alarms can be sent at the time of machine failure or in danger of failing due to overheating or excessive vibrations. Also, unnecessary check visits in factories can be avoided using remote monitoring and sensors. There are many more opportunities to be provided for improving cost management. The real-time data is also used for dynamic pricing based on supply and demand. Effective revenue analysis. Even after product delivery for additional services or maintenance, sellers can monitor product usage. Having data collected from manufacturers selling to wholesalers and retailers can help finance departments to match the cost more accurately, and R&D investments with the value consumers are placing on individual features of the product. So the trends in product knowledge can be identified more quickly and accurately. Forecasting improvements. Forecasting improvements can be made from better actuals and greater details of the product. Forecasting is often extrapolated or assumed based on past performance. With more accurate and timely data, forecasts can be made frequently for lower levels also. In addition, IoT enables a better understanding of the causes of finances and performance, which can help in building or improving driver-based forecast models. Such forecasts can improve the revenue tax system. Improve asset utilization. This includes buildings, infrastructures, vehicles, machines, and stock through improved usage data, process improvements, and asset sharing. For example, by tracking where people can mostly spend time or work, companies can analyze the use of the space and even reallocate it appropriately. Slow-moving stock can be monitored and noted if needed. The tech stock enables finance to check appropriate inventory valuation methods, like a specific item, average cost, first in, first out. A better understanding of asset lives can be used to improve depreciation, value in use, and resale calculations. Also, IoT-generated data on assets, costs, and revenue can be used for goodwill assessments. Improve risk management. Generally, IoT has very few implications for liability. However, it can be used to better manage guarantees and warranties. Breaches of terms such as failure to maintain oil level in machines can also be monitored, and analytical models can be used to help organizations predict claim levels. On a macro level, IoT can help organizations for better understanding and respond to extreme weather conditions or climate change. Accountants are often heavily involved with risk management in the company. The IoT provides real-time and additional data that can help accountants identify, understand, and manage risks. It is obvious that these drastic changes with technology, accountants are likely to see several challenges arising from IoT. Quality and traceability improvements. IoT is being used across a wide range of industries to improve product and service quality. Companies can use RFID tags and digital imaging to trace supply chains and prevent adding of lower quality items. While dealing with fragile products or goods, sensors can monitor for any mishappening or refrigeration failure. IoT also enables better tracking for expiry dates on goods with less risk of manipulations. And lastly, quantify employees' health and safety. IoT can be used to monitor employee well-being and improve staff health. People working in factories or under hazardous conditions can be monitored using sensors. By this method, people can be examined for their blood pressure level, heart rate, oxygen level in the body, along with environmental conditions such as humidity, temperature, pressure, and so on. Also, implementing facial recognition helps to ensure work done by employees. Moreover, IoT makes employees trace their efficiency during the day, monitor their work during the day, and at what time they are the most productive. This collected data can also be sent to senior employer in real time who can track the performance accordingly. So how do we get started if we want to learn more about Internet of Things? Here are a few suggested courses. Firstly, an introduction to programming, the Internet of Things specialization. Internet of Things offered by IBM. Introduction to Internet of Things. Introduction to the Internet of Things as well by Curtin University. And the Introduction to the Internet of Things and Embedded Systems. For additional learning materials, you can look into artificial intelligence in Internet of Things, impact of cloud computing, accounting professionals' perspective, intelligence of things, opportunities and challenges, the Internet of Things and overview, the Internet of Things and accounting, lessons from China. And last but not least, we have reached the last innovation trend, which is robotic process automation. In accounting and finance, robotic process automation, also known as RPA, can handle repetitive and time-consuming tasks. These tasks include document analysis and processing, which is plenty. With these mundane tasks managed by robots, accountants are able to spend time on revenue-related work such as strategy and advisory. Intelligent automation, a combination of RPA and AI, is capable of simulating human interaction. It can even understand and respond to implied client communications based on historical data. In the next video, we'll watch about what is RPA, where RPA can assist a business use case, extracting data with optical character recognition, benefits of having an intelligent RPA solution, benefits of having a low-code environment, benefits of having concurrency support, and benefits of having an RPA as a service solution.
Hey everyone, today let's talk about RPA, or robotic process automation. In my opinion, the definition lies more in the terms process automation and less in actual robots. But RPA is changing the software world, much like physical robots have changed the world that we live in every day. For example, take a vending machine. There's not a person standing there sorting all your money and vending the goods. It's automated because it's a tedious task. Now, RPA is doing the same thing in the software world for tedious or repetitive tasks. But for things like IT or even business process management, RPA is not going to help. And that's because these require more specialized skills. So where can RPA assist? Well, let's start with an example inspired by one of my favorite TV shows. Let's say we've got a disgruntled employee. We're going to call him Pete. Now, Pete has to take a number of documents that are stored, digitally, and then convert them into forms that he then has to file. So this is a very tedious task. So he has to take all of these forms, write them out manually, and then finally actually go and file them. So this process, let's say he has to do this, 10,000 times. That means, Pete's going to be pretty unhappy about this because this is a very tedious, repetitive task. It's something that, with RPA, he could actually automate. So let's see what Pete would do if he wanted to set up an automation to do this flow. So the first thing he has to do is identify what's the data, where is it coming from? So in this particular example, the data is already in a computer somewhere. And let's say that it's coming in through email, or maybe his coworker, Kelly, is manually inputting them from, phone calls with customers. So they take the customer forms, they put them into the computer. Now, Pete has to extract data, right? So that's going to be the first thing that RPA can help with. So with OCR, or optical character recognition, along with the data that's in the computer, Pete's able to pull out data. And what he's going to do is actually extract that data for further processing. So that data can be things like the customer's name and the info. Let's say in the customer form, it's the complaints that make up that information. So taking that data, so the next thing Pete's going to do is, let's say, validate it. So make sure that none of the data is corrupt and, all of the data looks good. Finally, he has to input it into a digital form. So he puts it into a digital form. And finally, he sends it off to a printer. Now, at this phase, all Pete really has to do is take the final forms that are printed out and then file them. And that's going to be a whole lot easier to do than doing this manually for all 10,000 customer complaint forms that are coming in. So that's where RPA can really assist with tedious, repetitive tasks that require things like clicking through user interfaces, copying and pasting data, or kind of other things like optical character recognition where you have to extract data. So when choosing an RPA solution, which is going to enable you to do this type of automation, I'd say there's 4 major things that you really need to be looking for. Now, the first one I'm going to start with, you want to make sure that your RPA tool is intelligent. Now, in this particular flow, Pete used a lot of capabilities. So he used OCR, optical character recognition. In addition, he used different data manipulation techniques. So this enables Pete to do things like extract, input data, validate it. And finally, he even had a function to be able to print something out, create a physical piece of paper from a software-based automation. That's just scratching the tip of what robot RPA can do today. So another thing RPA can do is things like AI or machine learning to train a model to recognize not just simple characters, but maybe even images. So that's something that Pete might want to augment this automation with in the future. So that's one thing you want to make sure is that your RPA tool is intelligent. Number two, low code. So RPA is really only going to be effective if the users that are creating these automation find that process to be easy. Otherwise, management might choose to actually just have their employees do it manually if creating this type of automation was too time consuming. So a low code RPA environment is going to enable Pete to do things like drag and drop components and have minimal touch to actually get this automation created end to end. Number three, concurrency. So this is going to be the ability to run multiple robots at the same time, multiple automation tasks. So for the 10,000 customer complaint forms, say this task takes 15 seconds, that's a lot of time. So imagine if you could launch multiple robots and divvy up that work. Well, you could get through the task at hand much more quickly. So an RPA solution should have concurrency support. And the last one I want to mention here is RPA as a service. Now, an as a service model is going to come with a number of advantages. For one, it's going to give you shorter time to value. And that's because Pete doesn't have to worry about spinning up his own infrastructure, installing the software, managing that environment. He can just log in and start building these automations right away. That brings me to my next point, currency. So not concurrency, but currency, which is keeping up with the latest versions that are available. So RPA and the world of RPA is changing quite rapidly. And so with some of the intelligent capabilities enabled within RPA, say a new version of OCR comes out and he wants to use it, well, with an RPA as a service capability, you can get updates more quickly. You're more current with the latest versions of software. So you get to use those latest components, and maybe OCR 2.0 kind of helps fix some of the bugs with pulling data from customer complaint forms. Finally, I think the last one that I want to mention here is that it allows you to collaborate. So imagine that Pete builds this automation, publishes it, and then now wants to share it with the Nashua branch of his company so that they can take advantage of the same process to automate this flow and kind of file customer complaint forms. So as a service environments generally are multi-tenant and enable you to collaborate with your coworkers. So this was a quick overview of RPA. RPA tools are quickly growing in popularity, and so is the scope of what RPA is able to actually automate. Now, if you like this video, have any questions or comments, be sure to drop a like or a comment below. As always, stay tuned and subscribe for more videos like this in the future.
Okay, so why RPA? Our system's not working just fine without it. As a matter of fact, people were equally, if not more, suspicious a few decades ago when the internet was first introduced. Today, it is impossible to even imagine a world without the internet. Then came social media networking, and the next phase of our development is definitely RPA. The following are a few major reasons for using RPA in financial and accounting services. Better productivity. There are no work hour limitations. It basically works 24/7 and 365 days a year, catering to customers. It also allows for better customer care and more services. It is cost effective. It significantly reduces the cost of manual labor by the automation of repeated processes, and it also eliminates the need for back office resources. Overall efficiency. Considering the above-mentioned features, RPA in accounting and finance provides a more efficient system with fewer resources consumed. And performance. The performance of a software robot is definitely better than an employee, as it has the ability to make error-free tasks in minimal time and at a much faster pace. So a few causes for you to consider if you want to get started on RPA. Firstly, beginner's guide to RPA. Getting started with RPA. Thirdly, introduction to RPA automation anywhere. Fourth, robotic process automation RPA overview. And lastly, RPA lifecycle. introduction, discovery, and design. For additional learning materials, you can start on impacts of robotic process automation on global accounting services, RPA in accounting, RPA in finance, supporting portfolio management, applying a software robot in a portfolio optimization problem, transforming the finance function with RPA, and lastly, what is robotic process automation? Now it's time for interaction. So a few things we can think about. If anyone would like to share, how else would you like to see innovation in your field of study or sector? What skill sets do you think are required to achieve the innovation you have mentioned? And if you have any experience in any of the innovations that's mentioned in today's training, do you have any tips or tricks to share with the attendees on this call as well? And lastly, would you have any additional learning, free learning on innovation in this sector to share with the attendees on this call? Is there anyone who would like to share? Okay, no problem. I think because partly we are also running short of time, maybe I'll just touch quickly on this. So I guess different professions perceive innovation very differently, especially when it comes to accounting firms. It's believed that, you know, the accounting professions, innovation, they generally originates from the technology companies providing accounting and related software. And there was actually a study done, and what they concluded was that about 41% of CFOs actually cited technology as a major source of stress in their jobs, saying that innovations in accounting are progressing so quickly that it's very difficult to keep up. So I think in terms of like any forms of transformation, there's no such thing as a one-size-fits-all approach to things. It really depends on the size and the scale of your company. And you can look into different aspects. So for example, if you start in a small firm, you can basically start with how to eliminate basic data entry processes, because the less time that you spend on manual things like that, the more time you can spend on providing more essential services to your customers. And then in terms of what skills, I personally feel that having a mindset of innovation is very important. And having basic digital literacy is definitely a key skill as well. So approach innovation with a willingness to adapt and keep an open mind. All firms can, you know, regardless of your size and types, you can definitely benefit immensely. And with increasing like market competition everywhere, it's very hard for businesses to grow and flourish if you just keep relying on an outdated service offering. That's because your clients have now a lot more options than available in the past. So I think with that, in regards to additional learning materials, I'll be sharing a few of that in a few minutes. So let's move on. So additional reading. For Women in Innovation, here are a few suggested readings for you. Firstly, Inspiring Women in Innovation, Paving the Way for New Generations. Latest Women in Innovation Awards announced supporting female engineers. The third one is the gender effect on a firm's innovative activities in the emerging economies. Fourth, you would like to take a look at the 2020 watch list, Women in Innovation. And lastly, Women in Innovation, Understanding Barriers to Innovation. So additional free training, what we have here, we have a topic about empowering women through technology for sustainable goals, 5 and 7. So it talks about Wi-Fi and how how Wi-Fi needs can be to run smoothly like any electricity or water, and to promote financial independence for women while staying at home during the COVID-19 pandemic, and how we can achieve this. So to access this free training, all you need to do is firstly sign up for an account at lovespec.com. Click on your account profile on the top right-hand corner of the web page, and you see Learning Resources button on the yellow banner. Look for the course entitled Empowering Women Through Technology for Sustainable Goals 5 and 7. So next we'll move on to the Q&A section. Anyone has any questions? Please don't be shy and ask. Okay, since that there is none, no problem. Lastly, before we wrap up, there is a survey that I need everyone to do. The link is here. Please fill in the survey form using that bit.ly link. Basically, to get your certificate of attendance, we will require you that you've complete the survey, basically. So can you take a few minutes, 2 to 3 minutes, and fill in the survey using the bit.ly form, bit.ly link on the form right here?